This is not a HMRC is coming for you conspiracy video, okay? HMRC isn't targeting random businesses, but in 2026, the system has changed to the point where more directors like you will receive formal HMRC letters. Escalation is happening earlier. Tolerance for delay is lower, and risk flags are now automated. And most directors don't realise that they're generating those flags. Now, the dangerous assumption that I think you're thinking is, we're too small, we've always normally filed on time, we're not doing anything wrong, HMRC don't only go after the big boys. And this is the assumption what causes the shock when the letter lands, because HMRC isn't reacting anymore. They're looking at data, and then it's all automated. Now, in 2026, this is different. Things have changed, and there's been 3 major shifts. 1, automated data matching is now the norm. HMRC will cross-check VAT, PAYE, corporation tax, self-assessment. It's all done via AI, even companies' house filings. They're even going to look at time to pay history immediately, and it happens without a human making a judgment. So if your PAYE shows, say, 200 grand director's wages, but your self-assessment says 8 grand, and the director's loans increase, and VAT's been late twice in the last year, the system flags a risk profile. And it's not because someone suspects fraud, it's because the numbers don't add up, they don't align. Now, number 2 is risk scoring. It's behaviour based. It's not, I mean, HMRC aren't focusing purely on unpaid tax. They're tracking patterns like repeated lateness, broken payment arrangements, directors' loan accounts that are growing and growing, even sector distress, you know, hospitality, retail, construction, recruitment. They're also looking at previous insolvency history, so it's cumulative. You don't get escalated for one mistake, you get escalated for repeated signals. Now, number 3, collection pressure is higher. I mean, this is probably going to go out, I think, in March 2026. The UK tax gap is huge. Debt recovery is prioritised. Now, I've said it time and time again, something that used to take 12 months from not paying the bill to perhaps getting wound up, it's happening in 6 months. So that the escalation timelines are a lot shorter. Now, reminder cycles are tighter. There are that many HMRC enforcement agents out there now, like getting that knock on the door happens quicker. And what used to be a gentle reminder very quickly becomes a formal demand. Now, you as directors, I want to go through some scenarios where you are triggering HMRC, and they're probably scenarios you're doing it accidentally. So scenario 1, you're late with your VAT return once. It can happen, but then you're late again. Now, one late VAT return going in or one late VAT payment doesn't trigger disaster, but 3 within 12 months, that signals financial distrain. The system doesn't say, oh, they're struggling. It says, increased risk of non-payment, red flag. Scenario 2, you're using PAYE as working capital. This is one of the biggest triggers. PAYE is employee money. Repeated delay here moves you up the risk ladder quickly, especially when combined with non-payment of your VAT. Especially combined with directors' loan accounts increasing, especially combined with not paying corporation tax on time. And scenario 3, and this is the most common and it's really, really serious, failed time to pay arrangements, okay? Now, a lot of people misunderstand this and they think a failed time to pay is worse than no arrangement. Well, it's not. The minute you fail a time to pay arrangement, you have shown an inability to comply. You've broken a commitment to HMRC. Now, HMRC won't forget that. They just literally go down the debt collection process. And if you fail the time to pay arrangement, there's a good chance the next thing that you're going to hear is either an enforcement agent taking control of goods, or a winding up petition. Now, scenario 4, directors' loan accounts are growing. You know, your DLA now creates a link between company stress, personal benefit, tax exposure, and if HMRC sees significant tax arrears, a director's loan account that's increasing, a lower declared income on your self-assessment than what you're putting through the books, HMRC aren't going to accuse you, they're just going to investigate you. And scenario 5, sector risk. Construction, retail, hospitality. If you are in a high failure sector, scrutiny is increasing. It's not personal, it's just statistical. You know, I think HMRC, like they're getting harder with companies like recruitment companies or payroll companies or takeaways, restaurants. Now, this part of the video is about what actually happens when a letter comes. Let's walk through escalation properly. Stage 1, you're getting a gentle reminder. Low risk, you can reset this bit very, very easily. But if you don't do it, stage 2 is a demand letter. Stronger language, stronger deadlines. And this is where most directors panic. Stage 3 is debt management, phone calls, formal recovery are coming out to see you. You're now in escalation. And stage 4, pre-enforcement warnings. This is where we're going to talk about taking control of your goods. Now, let me tell you, if somebody comes round with a clipboard and takes a note of all the assets in the business, and you sign it, the assets are gone. Unless you pay HMRC relatively quickly, in full, they're going to be removed and sold at auction for tuppence halfpenny. Now, listen, at this stage, silence is interpreted as non-cooperation. You can't bury your head in the sand. You can't hope that it's going to get better. You've got to get the bull by the horns. Because the next stage is winding up. Listen, this is not informal. At this stage, if you are being threatened with a winding up petition, you've lost control. And if the winding up petition comes, well, the first thing you'll hear about it probably isn't the letter. It'll be people ringing you, telling you they can help you with a winding up petition, or you'll be getting emails. In fact, listen, if anything I've said to you so far has sort of hit a nerve, go to the comment section. Go to the link at the top of the comment section, click the link. One of my team will call you today, okay? We're #1 rated on Trustpilot, hundreds and hundreds of reviews, and we'll help you understand your options. Now, the biggest mistake you can make after receiving these letters, and this is like where damage multiplies, is mistake 1, right? And this sounds crazy, but it's a panic payment. So you basically use all the money in the bank to pay the bill. And why that can be a problem is it can drain your cash flow and actually cause insolvency. Mistake 2 is you ignore it completely, which means the escalation is going to accelerate. Mistake 3 is you ring the people, you ring HMRC, and you agree to payments you can't sustain. And you're breaking the plan a few months down the line because you were just so frightened and you wanted to get it off your desk. You've got to be careful here, right? You've got to be careful. Now, this is the bit that I think maybe they don't want you to understand. Listen, HMRC doesn't hide the rules, but the system isn't designed to educate directors. It's designed to collect tax, reduce risk, escalate non-compliance. If you don't understand how this process works, how risk scoring works, how escalation timelines shrink, how payment plan history affects you, how your compliance affects you, you basically escalate yourself accidentally. It's not a conspiracy, it's design. And this is the problem. A lot of you are making decisions on how our HMRC used to be 2 years ago. Now, this is what you've got to do to protect yourself, right? Protection is filing the returns even when you can't pay. You get into more bother by not filing than filing and telling them you can't pay. So please make sure your returns are going in on time. If you're setting up a time to pay arrangement, right, which is basically you saying to HMRC, I can't pay you in full, I need to pay the VAT, PAYE, corporation tax over this extended period of time, make sure you set a realistic time to pay. And the only way you can do that is to have some accurate financial information. So you know what's coming in, what's going out. You've got some projections, you know, and set something that gives you a bit of margin. I mean, the reality is, if you get forced down an insolvency route, the chances are HMRC won't get anything in lots of insolvencies. So you're in a bit of a position of power, okay? And declare this stuff early. Like, don't wait for the enforcement agent. As soon as a letter comes, pick the phone up. Pick the phone up, tell them where you're at. Even if you can't pay them anything, just letting them know where you're at is helpful. And please stop borrowing emotionally. Like, I've seen these VAT loans people can get at extortionate interest rates, and they've got to personally guarantee them. You've got to be careful. But listen, just act before enforcement happens. The earlier you act, the more options you've got, the more leverage you retain. The later you act, the less control you've got. Now, anyone could receive an HMRC letter in 2026, and it's not because you're a criminal. It's because the system is faster, it's more automated, and it's more behaviour driven. The letter isn't the disaster, misunderstanding it is. If you've received an HMRC letter or you feel one's coming, speak to us at Director first before it escalates. We'll help you review your real exposure. We'll explain what stage you're at. We'll help you preserve some leverage, and we'll help protect yourself personally, because there's always a solution, but only if you act before the system moves to the next step. Be careful who you trust. Now, if you've enjoyed this video and you want to find out more about setting up a time to pay arrangement with HMRC, okay, go over there and I'm going to give you a video on exactly how you should speak to the HMRC, what you should say, what you shouldn't say, so you'll be able to watch that video and pick up the phone to the HMRC and do a good job. Thanks for your time. Chris Worden, Director First.